Hello everyone, welcome back to Chill Dill Trades. Today I'm going to switch it up a little bit. I'm actually going to talk about the crypto market, and I'm just going to cover what are kind of like my three favorite cryptos. I think they're the safest long-term bets, which are Bitcoin, Ethereum, and Cardano. They're my three favorite projects. Man, my nose has been so itchy lately. But let's dive in to the video. If you find anything substantial, anything valuable from this video, please like the video. Please subscribe. Have more and more content coming out, 3 to 5 videos a week covering everything happening in the market, breaking down technical charts, as well as giving you some potential stock picks. Okay, so first we're going to start with Bitcoin. So I kind of pre-drew all the graphs just so we didn't waste time drawing things because the videos have been a little bit longer lately. Okay, so Bitcoin's in a very interesting place. So today we actually saw it come down and almost test the 30,000 range. So we hit 31,000, which scared a lot of people. There was some news that about the pipeline things, and they actually recovered the Bitcoin, which people I think got a little scared about that you can actually maybe get into someone's wallet and take out their Bitcoin. So there might have been fear around there, but we also have just fear in general with basically I think it was SEC, or not the SEC, but some government entity wanting to regulate, have a little bit more ability to regulate crypto. So kind of all these news and all this fear that's generally been going on with the market, I think we felt it a lot today. But I want to see what the charts are saying. So the first thing let's cover is I just kind of drew out three kind of channels that the stock has been in or is currently in for Bitcoin. So the first one we see is on the first decline. So we saw the price come down. It came back up to the top of the channel. It came back down to the bottom channel, tried to continue back up, but it failed. And that's where we started the second channel. So the second channel, there's actually two of them, and there's a reason I did both is because they're off different candles. So I always like to layer in my channels to understand where all the potential resistance or support lines are. And so when we climb in a little bit better here, so we see Bitcoin break down. It kind of tested the edge of this channel and came back up. So on June 4th, last week, it tried to break back up into the original first channel off of the top, the all-time high of Bitcoin. But obviously you see it tried to break out one day, tried to break out again, and fell back to the downside. So right now we're trapped in this lower channel. And kind of by the looks of it, from the breakdown today, it definitely seemed like there was some buying at the bottom around 31. If we go back to May 23rd, we'll actually see that two candles basically touch the 31K. So technically, some people might call that a double bottom. We had a lot of buying support down there. We're definitely going to have a lot of buying support in that 30 to 32K range for a while, I think. But let's kind of see what else if it does break 30K. Because if it does break, or when it does break, depending on your perspective, there can potentially be a little bit more downside, which I think are areas to add to your Bitcoin position if you own it. So as you can see on this more downward channel, we hit the bottom of the channel, we went back up. So typically you see it hit the bottom of the channel, hit the top of the channel, and in theory, unless it breaks out of the top of the channel, which it could do here eventually, technically it should go back and hit down the bottom of the channel. So if that's the case, things aren't looking too well because you see the bottom of these two channels are pretty low. They're down at like the 25, 26K range probably, which is not a good sign. I would say, actually, it's kind of like a 50-50 right now. I'm not too sure what's going to happen, but I did draw some trend lines to try to figure out where those support lines could be if it does break 30K. We can't predict what's going to happen, but let's take a peek at what might happen. So here's the 30K mark, really big support here. You see a lot of candles that have support here. There's a couple candles here, a couple candles here, a couple candles here, all bounced off it prior and went up. So we're going to see a lot of support there. We see a candle here, candle pretty close here. So there's a lot of buying at the 30K. I think a macro factor to really think about is institutions. So it's a little more speculative thought, but if we think about kind of where or when the Bitcoin frenzy really started this year, it was after Elon Musk and some other people came out, some business said that they've had Bitcoin on their balance sheet, or they're adding Bitcoin to their balance sheet, and these big corporations. And that was down like the 10 to 15K range. And since that 10, 15K range, it actually, I think it was around here is when Elon Musk said that, and we just saw crazy movement. This was just I would say a lot of retail investors jumping in, probably some institutions as well. But I would say majority retail investors. Maybe some, institutions actually bought in here around the 30K. But in my mind, I think institutions are going to try to get this price as low as possible to buy more. If you think about it, why would an institution want to buy at 30K? That feels a lot more risky. Institutions are starting to take a lot more interest in Bitcoin. And I think that 30K price range is a little too risky for them. And so I could see a lot more pressure if we don't, around this 30K mark. And if we do break support, I think institutions are going to start diving in a lot and start buying up a lot of the supply. But let's get back to the original point. Okay, so we have a lot of support at 30K. I would say the next major point is 27K. And we kind of have these three staggered lines that I would consider buy points. So I think around 27, 28K, there's going to be a lot of support. You can kind of see, let me zoom in a little bit. You can kind of see a lot of accumulation kind of in this area before, it couldn't really make a decision on these couple candles. So there's going to be a little bit of support around that 27, 28K. But if we do break 30K, I think there's two scenarios where they're going to come down to 37K, 8K range and then jump right back above 30, like a head fake, or like a head fake, I guess you'd say, to the downside. But because I think there's going to be so many stop losses at 30K, that I think we could automatically go down to around the 24K range. Because that's where you see the next accumulation in the past. There's a lot of accumulation in this range. The next space where I think, in my opinion, is going to be about the all-time, I don't think we're going to go much lower than 20K. If we look back, the past all-time high, back when we had that frenzy a few years ago, was at 20K. So you're going to have a lot of bag holders from back here. So there's going to be a lot of support back here because that was all-time high. And when you zoom in, there's also a lot of accumulation right here as well. And so in my opinion, I don't think if there is like a crazy sell-off and fear continues to drive in the crypto market, which I doubt we're going to get this low, but you never know. I would say if I was, personally for me, I'm going to be gobbling up shares, or not shares, but I'm going to be buying up tokens in this 18 to 20K range if we get that low. But these are things to think about. Kind of, I would say, come in here and draw kind of these kind of these trading ranges on your own charts to kind of figure out, what is a potential direction we can head. If we do break out, say in the next 5 days, if we break above the 33 range, then this kind of really steep downward momentum is probably lost. And I would assume we'll probably see some sideways accumulation around 30K, and it's going to probably try to break up to this less severe trading range from before. But as I've already gone about 10 minutes, I'm going to stop the video here. If you like any of the content, please like and subscribe, and check out the two next videos. I'm going to do Cardano and Ethereum in the same video. So you'll see that on my channel as well. Go out and check that out. I think there's a lot of good insights that what we're starting to see, and I'll kind of preview it right now. So what I'm seeing in the market is Bitcoin. If we compare where Ethereum and Cardano was when Bitcoin hit 30K, I think Ethereum went down to, or Cardano went down to about $1-ish range, $1 to $1.10, but Cardano is still at like a $1.50. And so we're seeing a breakdown in Bitcoin much more than originally where Ethereum and Cardano broke down the first time with Bitcoin back in the middle of May 21st. And so there's a little bit differentiation happening between Bitcoin and I think the altcoin market. And we'll draw some charts in the next video. Go tune into that video. But please like, subscribe, share with your friends. More content to come. And I appreciate you checking out the video.